Have you seen how a ball moves when dropped from stairs? It doesn't move in a straight line. When you drop it, it touches the floor, then bounces back, again touches the stairs and bounces back, and it keeps on doing it. The same thing is true with any market. Whenever the price moves up or down, it doesn't move in a straight line. It moves in a form of highs and lows, and these highs and lows are formed in a certain pattern or waves which help us to understand the price in a better way. And this pattern or wave is called impulse and correction. Hey guys, welcome to Crypto's Monopoly. My name is Daksh, and in this video I will tell you what is impulse and correction in the simplest possible way. And in the end I will tell you a technique to understand when a correction will end and new impulse will begin. By the way, I'm going to share a strategy that has over 80% of win rate, and I will be trading it live in front of you. Also, make sure you follow me on Instagram to stay updated, and do not forget to subscribe to this channel. It is said the impulse is where the professionals make money and correction is where the impatient traders lose their money. If you can identify impulse and correction correctly and master it, it can do wonders to your trading. Now the price moves up or down due to one simple reason: the imbalance between the parties. That is, when the buyers are more, the price will move up, and when the sellers are more, the price will move down. Now, even after the imbalance in the market, the price doesn't move in a straight line. And this is because there are different individuals trading in the market, and each one has got a different mindset, different psychology, and each one trades differently. So there are different psychological levels in the market to which the traders react. And this causes the price to move in a particular pattern called impulse and correction. Now let us understand each one in a better way. So the price is said to be impulsive when the price moves powerfully in any one direction. So basically, an impulse suggests that a single party controls the price, and the correction is just the opposite of impulse. Whenever the price moves very slowly sideways, it is called a correction. So a correction basically tells us that both the buyers and the sellers are fighting to take the control of the market. For example, imagine buyers are more than the sellers. So this will cause the price to move up. Now imagine at a certain point, the buyers and sellers got in equilibrium. That is, some sellers entered, and now both the buyers and sellers are fighting with each other to gain the control of the market. So whoever wins the fight will drive the price in their direction. If buyers win, the price will continue to move up, and if the sellers win, the price will reverse. Now this part is going to be very important, so stay with me, because finding out impulse and correction on the live charts can be very confusing, and there can be a lot of problems while doing it. So I have created 3 golden rules or characteristics for each, which will help you to identify impulse and correction like a pro. By the way, if you are enjoying this video, make sure you hit that like button. Now the rules to spot the impulse are very easy. The rule number 1 is look for strong moves in any one direction. The easiest way to find out impulse is to look for strong moves in any one direction. Like over here in this example, the price is moving in an upward direction and the movement is very powerful. The second step is to look for the same colored candles. In an impulse, you will mostly see the same colored candles. Like as I use white candles for bullish and black candles for a bearish move, you will see when there is a bullish impulse, there will be mostly white candles. And when there is a bearish impulse, you will only see black colored candles. Like here in this example, the price was moving down and you can see only black colored candles. Now, sometimes you may see mixed candles, but then the impulsive candles will be stronger ones and the others will be weak. The third step is to look for larger candles. Now, whenever the price is moving impulsively, most of the time you will find larger candles. Like over here in this example, here you can see when the price was moving down impulsively, the candles were larger. Now, the rules to spot the correction are, the rule number one is look for weak move sideways. Whenever the price is moving sideways, the movement is very weak, that is, it is not able to cover much vertical distance and the price is said to be correcting. The second step is to look for mixed colored candles. When the price is retracing or correcting, there is basically a fight between the buyers and the sellers, and so you will always see mixed candles. The third step is small candles. During a correction, the movement will be very weak and so the candles will be smaller. Like in this example, you can see that the price is moving sideways and there are mixed colored candles and the candles are very small, indicating that the price is correcting. Now let us take some more examples of impulse and correction. So here we are on Ethereum USDT daily chart. So let us try to find some impulse and correction on this chart. So if we start from here, you can see after this impulse over here we have a small correction because here are mixed colored candles. The candles are very small and the price is moving sideways. Then we have an impulse. Then again the price started to move sideways and here there are mixed colored candles. The candles are small. So all the three confirmation tells us that this is a correction. Then again the price moved down impulsively because there are same colored candles and the candles are big and they are moving down. So after this impulse, the price again corrected as here the price is moving sideways. There are mixed candles like black and white and the candles are really small because the market was in an equilibrium and both the sellers and the buyers were fighting for the spot. So after that, over here you can see the price moved up. That means the buyers won the fight and the price moved impulsively. Then again we saw a correction, then an impulse, then a correction, then again an impulse. Then over here we saw a larger correction because the price is still moving sideways. It did not move above this high and there were mixed colored candles and the candles were also very small. So after this then we have a small impulse, then again a large correction, then finally a big and huge impulse till this point. So after this impulse, the price again started to correct sideways. Over here you can see the price is moving sideways and there are mixed colored candles. Then an impulse, as the price moved down impulsively, it covered a very large distance. Like the price moved from around $480 to $306, which is very big movement. And then again we saw a correction, like a larger correction as the price was moving sideways, and then a new impulse, which would be this one. So this is how you find impulse and correction on the live chart. There's one really important thing I need you to focus on over here. The price basically moves in a pattern of impulse and correction. An impulse is always followed by a correction, which is then again followed by a new impulse. And it is said that most of the time, the new impulse after the correction is in the direction of the first impulse. And this can be very important when you use this technique in a trend riding strategy. Like in this example, in this uptrend, the price first moved impulsively, then it corrected, then it again moved impulsively, but in the direction of the first impulse, which is up. Then it again gave a correction, then an impulse, then a larger correction, and then again an impulse. And if you can notice, you will see how most of the time the impulse after the correction was followed by the impulse in the direction of the first impulse. Now here we are at the most important and interesting part of this video. How to spot when a correction is going to end. The easiest way to do that is to try finding a continuation pattern in that correction. The continuation pattern can be anything like a pennant or flags, etc. And after you find a pattern, wait for the breakout, and then you can get a confirmation that the correction has ended and the new impulse can begin. For example, here on ADA USDT chart, the price after an impulse started correcting. Then while it was correcting, it created a pennant, and after the breakout, it started a new impulse. The same thing happened over here. After the impulse, the price corrected and then created a bullish flag, and only after the breakout of the flag, the next impulse started. You can clearly see that if you are able to understand and identify impulse and correction precisely and find out when the correction is going to end or when the next impulse is going to begin, you can easily win trades. And the good thing is there are many other ways to do that. There is a strategy which I'm soon going to add, and that strategy help you write a trend by helping you find the new impulse and has over 80% accuracy. So stay tuned for that and make sure you like, share and subscribe, and most importantly turn on the notification bell so that you don't miss out on that strategy. Thank you so much for watching.